Hello, Warriors. Dale Pinkert here at TradeGATEHub.com. And we're powered by TradeView Markets, one of the best Forex and everything instrument brokers for non-US residents. Check them out. All right, so let's talk about the dollar. When I left you on Monday, we were trading here. I said we're going to make a new high. That was my contention a few weeks ago because of the RSI. At this high was confirmed. As you can see, the RSI now is under 70. It didn't make it. And one of the things I talked about is the dollar could make a new high, the DXY, without euro. So far, that's the case. So with the dollar making a new high, the euro held the 78.6 level. You could see it a little better on a shorter term chart. 78.6, well above 80 pips or so above the low at 108.06 is the low. So held it by about 75, 80 pips. Now, one day does not a trend make, but what I'd like to see now is the DXY attempt to make one more new high. Here's some intraday stuff. As you can see on the 4 hour, we're confirming. On the 2 hour, we are as well. So I'd like to see, this is the previous highs that we have here. Okay, so I just drew a horizontal line for that right here. And I'd say closing back underneath it is going to be a good signal that the dollar high is in. What I'd like to see is one more new high in the DXY, maybe towards par or so. And the euro again, not making a new low. So I'm wondering how people are going to explain when they talk about, well, DXY is not such a good measure because it's so heavily weighted in euro. Well, why didn't the euro make a new low when the DXY made a new high? Because the dollar's strong against other currencies as well that do not make up a large percentage of the basket, at least as large as the euro. So yeah, I'm no longer interested in buying the dollar. I've been talking about that even in this range, that there were trades to, short, buy the dollar and short other currencies against it. Now that we've completed this, at least have cleaned out all the buy stops over this triple top. You see that? Do you think there were any stops above these highs at 99.41? Again here at 99.29. Again here at 99.36. They've all been taken out. So anyone who was shorting this rectangle, most likely their stops got triggered with our high here at 99.75. So I'm no longer interested in buying the dollar, looking for shorting opportunities in the dollar led by euro. So do you buy right here, as I was explaining on Monday? If you reduce leverage, it doesn't matter if you're a cent or two early, right? I mean, would you be worried if you held a $1 bill and the next day it was worth 98 cents, a couple of cents, right? It's not a major move because you're unleveraged, but when you're leveraged, it could be huge. So reduce leverage on a scale in buy in euro. We have the ECB next week, so I don't want to get too aggressive. You could have some short covering into the ECB. ECB, there aren't much expectations about them being too hawkish. What they need to with their inflation numbers, but we'll see. But my view is that the dollar is completing a major top. Here's your weekly on the euro. Here's your weekly on the dollar. And that we're going to pause in here. And then you're going to have several different levels that you can use as add-ons. And that's what I mean. You weren't late selling the dollar if you didn't sell it up here after COVID. If you sold it here, you did okay. If you sold it here, you did okay. If you sold it here, you did okay. So you don't have to sell the top or buy the bottom to be a successful trader. You want to look for turns, of course, and I catch a few turns and also get run over a couple of times. A good example was Monday I shorted NASDAQ before the news of Elon buying a 9% stake here. And, you know, while I'm on the stock indexes, let me urge you to go back to yesterday's recording that Mike and I do on Tuesdays. In fact, go back to yesterday and the week before. So the week before, when we were up here, and we're not perma bears because we were bullish down here. We talked about it. And I said, well, you know, this would be a good time for the market to take a breather. It would actually be healthy. And that's what it did. And then Mike and I were talking yesterday, and we both have this pivot line here at 45.50. And, you know, we already had kind of a negative candle. It said looked like Wile E. Coyote ready to fall off the cliff or have the ledge break off. And Mike had important numbers at 44. I do too. You know, I pointed out this day as being very important to the last piece of the advance. It's when Powell was super hawk, and what surprised the market yesterday is Brainerd's kind of a dove, and she's talking QT and draining the balance sheet. So the big question now in S&Ps is going to be how deep it's going to be. Is this a complete failing rally from the big break we had in January? You have to be open to that too, that this first break that we had in January was the first wave down, or A, and that this low here is a failing rally for 2 or B, and that we could have C. There are a lot of people I respect that have targets down to 3,800, 3,400. I've interviewed over 1,000 traders, and there are a handful that are part of my intelligence gathering network that I pay attention to what they're saying because one reason, they're good. So just wanted to talk about the S&Ps that perhaps were, this is really going to be a test for the bulls to see if this was just technical. This bounce that we had, this huge squeeze out of the wedge, or that this was the beginning of a wave that we could have a pullback, say to 43.84, and then go to new highs. So I also want to talk about, I want to cover the rest of the currencies, but check out yesterday's video. If you stayed long, it could have saved you some money, could have, there were some nice short selling opportunities. Mike and I were on the air before Freeport sold off. I'm very bearish copper. Russia doesn't produce copper. It's in Peru. And the commercial setup is pretty negative on the copper. And I talked about it. Freeport McMoran as being a good proxy to sell copper. And to me, look at this divergence in Freeport. That Freeport has a chance of breaking back down to about $40. And then, you know, on the daily, here's your $40 level. Be a nice trade with some puts on. So that's my view of the market. As far as the pound is concerned, I do think the pound is going to make a new low. We're not that far away from it. The pound did not make a new low with the dollar making a new high either. 30.01, I think, is not a difficult task going forward. And the superstar Japanese yen is starting to struggle. And why do I say struggle? Because it's been really a nice bounce since this directional decline. It's struggling because, you know, yields, keep this chart in mind. Here, keep this point in mind and this point in mind. When it comes to yields, yields have way surpassed this high that the yen hasn't. And yields are up here. I think they're getting a little stretched. I thought they had peaked here, but you know, I can't just jump on the bandwagon about higher rates now after this or this type of massacre that we're having in the bond market here. So interesting. I thought we were going to have a false breakdown. That's not happening. Bonds better turn, or you have like a bond crash going on. So that too is not real positive for equities. I think equities have been ignoring the rates. But the yen, I think, could be setting up for some type of correction here. It's another good week that it's having. but I'm looking at maybe 78.6, or it's starting to close back under this 23 level. 23.19 would be your first sign that we're rolling over for a correction that could take us down to 1840. And I think that could happen on the first wave down in the dollar. Dollar definitely weaker than the yen. You look at this advance in the yen and you compare it to the dollar, all the dollar was doing was range trading here. So what I've been talking about for a few months, it's closer, it's around the corner. I just think that we have to be a little bit more patient. Probably into the ECB is going to be an inflection point next week. And I do think that there's a possibility that the euro may hold that 108 level. Let me tell you about 108 now. Everyone I talk to on the street is looking to buy it around 108. Well, I don't know, 108.70 is not that far away from 108. But what I've learned, and it doesn't matter what the market is, when you have consensus about a major number, about if it breaks through this or fails through that, or it gets to this level, it's a sell, or this level a buy, and you have a lot of people talking about the same number, what I've noticed over the years is that it either doesn't get to that number, or if it gets to that number, it goes through it like a hot knife in butter, and it's not an important number because everyone's waiting to play the same thing. So the most bullish thing that euro could do after the ECB is hold 108.06. Maybe the dollar index makes a new high towards par, and the next time the dollar makes a new high, we hold 108.50. So the 108 buyers may not step in because they want to get, to me, that's pretty close to, if you buy it here at 108.50 and you give the 108.06 a little tolerance, because they could flush the stops and take it out and then come back, would be a very important signal to me, because that'll be the second time that the dollar index has made a new high without the euro. So that's what I'm looking for in that next week. When you look at euro pound, which we had a real nice trade, it's almost done on the long side from 61.8. It's back to these levels. And I really don't think, even if the euro retests the highs, that we're going to get down to this 82 level. Maybe we go 78.6 in euro pound, right now holding the 61.8. So just think about it in terms of relative strength. On this break here, EG is holding above 61.8, and euro went 78.6 back. So even if there is a flush and a stop hunt under 108 next week, I doubt that we're going to trade under 78.6 here. This is where I'd be interested in being a buyer with the dollar at new highs, perhaps euro testing the low, and the euro pound still way above its low at the 82 level. Okay. Looking at gold and silver, it's really done nothing. It's almost comatose to me. And we had another potential false start. I keep looking. When I left you Monday, I said, this gold silver ratio is looking like it wants to head up and test its 80 level. It still could. Again, one day a trend does not make. And if there is a breakout in this, it's going to interrupt the bull trends in precious metals probably until July. That's where some of my intelligence gathering has some very important cycles due in June and July. And that could also be, if we're going to head down in the S&Ps and take out 4,100, that could also be a time period to, get your shopping list ready. And if the S&Ps do get cheap and, they trade back down under the 4,100 level, that perhaps by July, you're looking at something like this. So that would be pretty shocking. That I know some bulls that are looking for, 5,400, one more rally, But at this point, this isn't the kind of action I would buy. And even though it's only Wednesday, we have a 2-week reversal at hand in the S&P. So be careful with risk. Okay. And, perhaps this sell-off in equities could be what pushes the dollar up one more time. Something could come out of Ukraine to give the dollar one more push. But I will stop looking for new highs in the dollar if we start closing back under this prior line, back under 94.30. I'll put something on. It's still a long day, but we closed back under this recent breakout. This could have been wave 4 with a terminal thrust, and your first sign is going to be closing back under this 99.34, 99.35 level. Of course, this is going to be major, and this is when all the bears will begin to jump on the short side of the dollar. I wanted to cover oil. It keeps trying to rally, and I don't know what kind of news besides perhaps Vladimir Putin banning any sale of his natural gas to Europe. That could do it, or any energy from Russia to Western Europe, could. But this looks like it's pretty heavy. And I talked about this being a 61.8 up here, potentially a failing rally. And if it is, we could expect equality of this from here. So if you take it from 130 to 95, you're talking about 35 from 116, 81. So I'm a little bit contrarian, and compared to a lot of people out here, and I think commodities are going to take a breather. I've never seen people more bullish commodities since the 70s, when I was just breaking into the business, and we had 800 gold, which sounds cheap now, but it was 200 when it became legal for Americans to own gold again. Then went to 100, and then we had the Russian invasion into Afghanistan at 880. So I think there's a possibility of lower numbers in energy. That's not going to help the market either, because some of the leadership over the last year or so has been this tremendous move up in crude, and many of and the oil shares and energy complex has really outperformed almost everything else. Something else to talk about on the equity front is we're getting this huge move up in yields, right? I mean, here we are. We took out this 2% level, had this little pullback, then went to 250, smaller pullback, and we're at 263 now. So here's my question. The market says that higher yields are always good for the banks. Well, look at higher yields and look at the XLF. Okay, so when I look at the XLF, I say, well, we've had this dramatic rise in yields, although people will point towards a yield curve headed towards inversion, and we can't make any headway to get to new highs, right? And back under 36, there's problems. What happens if yields reverse and begin to soften again? So when I look at a market and it can't perform with a tailwind, I ask myself, what would it do if the tailwind turns into a headwind? And a headwind for the financials, unlike NASDAQ, would be for yields to start pulling back. So be careful if you're in banks. I think it's also a vulnerable group, because if we do get this commodity pullback from the jawboning of what the Fed has done, and perhaps some more Fed action in early May, yields would have a chance to soften up again. So just keep that in mind. You don't want to be long banks during a period where interest rates are falling. And it's been a while since the XLF hasn't made a new high, just like the market, since January, with a very strong backdrop of consistently higher yields with pauses, then higher yields again. When I look at the Russell, which a lot of people thought, was going to take over leadership, that looks pretty negative to me. Look at this rally. We rallied right back to the base. Prior support becomes new resistance. Perhaps the Russell's heading towards IWM 176. And that would be an interesting area because that's almost back to where it was pre-COVID. This was a breakaway gap. I mean, it was the strongest performer, and that did nothing until it decided to have a false breakout and squeeze every short out, and then this big liquidation break. So the Russell also looks negative to me. Looking at the gold shares, GDX pulled back. I think there's going to be a good pullback to buy in the miners. GDX pulling back. Here's uranium. I know that some of them, like Cameco, have acted better, but I think there's going to be a good break to buy in commodities around July across the board. So my next big position, I would think that a weaker dollar, while the Dixie is topping, is going to be the next big inflection point in the markets. It's going to have a lot of ramifications. And that's something that I'll be posting in our main chat at TradeGATEHub.com. I'm always here to answer questions. In fact, let me open it up. Any questions? Yeah, sure, Mark. Aussie, you really have to respect how strong Aussie has been. It's been the star of the show. Again, commodity producers. So people are gravitating towards the Aussie. I would say that it's a possibility that Aussie corrects with commodities correcting as well. So no surprise to my listeners that I still remain bearish on copper. I still think I'm going to have better long buying opportunities. And actually, I think there's a chance for 1,600 gold. That's a big trade, but one day at a time. Have to close back under 1886. I think that silver better hold this 24 area here, which it's trying to do today. As I explained on Monday, just arithmetically, 24 and 27, you subtract it from 24 support, gives you 21. That'll be new lows in silver. So I hope that we're adding value to what you're trying to accomplish as a trader. And again, the theme, the narrative is you could almost short the whole board. I think that's what's setting up into July, that people are going to remember that cash is not trash. I'm not saying that there aren't going to be rallies along the way, but we start getting closes back under 4,400 in the S&Ps. Really, although this support comes in, the 200-day, we could come all the way back down to the wedge line and also hold and try and do something right. But that's a long way from here. So be aware that this could be a failing rally, and it's hard to find a chart that you want to buy. I don't want to buy the gold. I don't want to buy the silver. I don't want to buy the copper. I don't want to buy tech. Not yet. I don't want to buy oil. I thought I wanted to buy bonds. And I don't know. It's really a disaster. Something that we should be thinking about with what's happening in bonds here is that there's a lot of market cap and money being lost by bondholders, and not just in treasuries. Here's the corporate bond market. So, we talk about how much market cap is lost in stocks when, like Amazon got hammered at one time, how much market cap came off. Can you imagine the negative wealth effect in a market that's bigger than all the stock markets put together, and that's a global bond market? So, it's over. You could look for counter trend bounces, but the same thing is happening again. I thought this time when we had a sell-off in equities, we get some flight to quality. So, what's the market? Where's the market hiding? Where's the money hiding? Is it hiding in bonds, corporate, high yield? Actually, the high yield's not making it lows. It acts a little better. I don't know. Are they hiding in Twitter because Tesla looks heavy now? A lot of these stocks look like Facebook can make a new low, and Google was acting great, but looks heavy. And even the stalwart, right? I think that you could get yesterday with Mike. I said, well, we could at least pull back to 167. But if this is wave 3 to the downside in the market, even the generals will be taken out. Okay, so what else? So maybe we want to buy crypto. I don't want to buy crypto. Bitcoin looks like it can make a new low. It never diverged at the lows. This looks corrective. Maybe we're going to have a little panic under 35. So the way I look at it right now is people say cash is trash. And I'm saying right now for a while, cash will be king. It may not be the dollar, but being liquid, while asset prices across the spectrum, commodities, equities, debt are under pressure, cash is king, and you can short the world. So that's my report for today. I'm Dale Pinkert. Some people call me Coach because I love to teach. Welcome everyone in here. We're powered by TradeView Markets. Mike will be back tomorrow. Everyone's keeping a good thought for Mike's having a little medical thing he's dealing with today. And we're a family here at TradeGATEHub.com. So come here and learn, teach us, share your analysis, because iron sharpens iron. I'll have Adam Button here tomorrow. Adam's with Forex Live, and he's a real good trader, excellent analyst. So we'll see if what Adam thinks about some of my views and what he's thinking with the dollar making new highs in here. So good hunting. Remember, the only thing we can control is risk. So control it. And I'll talk to everyone tomorrow with Adam. Thanks for your attention. Dale Pinkert with TradeGATEHub.com. Adios.